This call is now being recorded. Good morning, friends. We will be continuing with the point from where we were left in the last session, and this is the session pertaining to profits and gains from business and profession. So, we were discussing what are the expenses, incomes which should be allowed, which should not be allowed, and how the adjustments should be done to arrive at the right profit. Okay, so we had the format, which are the ones which should be added, which are the ones which should be deducted, and many other points were discussed in the last session. And now we are going to continue from where we were left with. So let's continue the chapter and the income from profits or gains from business or business and profession. Hope you have cleared all the doubts as far as the last session is concerned. Now continue with the uh, so this was the format. This is the format to be followed to determine the exact profit or loss from business or profession. And we have covered these points. All maximum points are covered in the previous session, like what are the elements which should be added and what are the elements which should be deducted to arrive at the right profit. But this and this particular items are yet to be discussed, and this particular session we are going to discuss about how and why undervaluation of closing stock or overvaluation of opening stock should be added, and overvaluation of closing stock and undervaluation of opening stock should be deducted. So let's take the first one. The first one of the day is overvaluation of opening stock. Overvaluation of opening stock. So here you are given a trading account. The opening stock is 3 lakh rupees. The purchases are 5 lakh rupees. The wages are 2 lakh rupees. The sales are 10 lakh rupees. And the closing stock is 2 lakh rupees. The total of the credit side of trading account is 12 lakh rupees. And the debit side also 12 lakh rupees. But the expenses are here 10 lakh rupees. And the net profit is 2 lakh rupees. Now, some additional information is given. The additional information is related to overvaluation. The overvaluation of opening stock by 2 lakh rupees. So, in this opening stock of 3 lakh rupees, there is a overvaluation to the extent of 2 lakh rupees. So, what does it mean? It means that the opening stock is only 1 lakh rupees, but it has been overvalued by mistake or deliberately or unintentionally or inadvertently, whatever may be the case. But this should have been only 1 lakh rupees. It is overvalued by 2 lakh rupees to 3 lakh rupees. So there is a element of mistake or error which has committed, and because of this, this profit is likely to be affected. So to arrive at the right profit, what should be done as far as overvaluation of opening stock is concerned? Okay, so let's remove this 3 lakh rupees, and in place of 3 lakhs we will place 1 lakh rupees, which is the right opening stock value. So what will happen? So here we got 12 lakh rupees on the right side of trading account, which is 12 lakh rupees. We will carry forward to the other side 12 lakh rupees. And now the expenses are 1 lakh, which is opening stock, purchases to 5 lakhs, and wages are 2 lakhs. So total is 8 lakhs. So the gross profit or net profit I will consider is only is for now 4 lakh rupees. Is 4 lakh rupees. So what has happened? Because of overvaluation of opening stock, the expenses are were increased, and because of this the profit was decreased or deflated. So previously it was showing a profit of 2 lakh rupees, but by showing the right opening stock value, the profit is changed from 2 lakhs to 4 lakhs. So the profit has increased. So how it has happened? By adding overvaluation of opening stock. Overvaluation of opening stock. So remember that overvaluation of opening stock should be added to net profit to arrive at the right profit. So, so this is the rectified profit and trading account. This is the rectified trading account. So here I have changed from 3 lakhs to 1 lakhs, and because of this, the net profit is now 4 lakh rupees from the earlier 2 lakh rupees. So 2 lakhs is wrong, and this is the right one. So due to overvaluation of opening stock by 2 lakh rupees, the net profit changed from or increased from 2 lakhs to 4 lakhs. Hence, in a situation when the opening stock is overvalued, the amount of overvaluation in this case is rupees 2 lakhs should be added back to profit by such amount to arrive at the right profit. So overvaluation of opening stock should be by whatever amount it has been overvalued should be added to net profit to arrive at the right net profit. So please remember the summary of the discussion. Overvaluation of opening stock should be added back to profit. Next one. Next one is undervaluation of opening stock. Next one is undervaluation of opening stock. So the previous case was overvaluation of opening stock. The previous case was overvaluation of opening stock. Now the time has come to discuss about what happens if undervaluation of opening stock is there. So let's take a small example. Opening stock is 1 lakhs, purchases are 5 lakhs, wages are 2 lakh rupees. So this information is given. The total expenditure on the debit side of trading account is 8 lakh rupees. By sales, it is 10 lakh rupees. By closing stock, it is 2 lakh rupees. The total on the credit side of trading account is 12 lakh rupees. Carry it to this side 12 lakh rupees, and you will get the net profit as 4 lakh rupees. Now, as the case is of undervaluation of opening stock, so there is additional information related to undervaluation of opening stock to the tune of 1 lakh rupees. So undervaluation of opening stock has taken place by 1 lakh rupees. Means what? The opening stock was X amount and it has been undervalued by 1 lakh rupees. So what it means in this case is that the opening stock was 2 lakh. You have to just add this 2 lakhs to 1 lakh. So the original opening stock was 2 lakh rupees, but they have shown this opening stock as 1 lakh rupees. That is undervaluation. So undervalued by 1 lakh rupees. That is the meaning of it. So in this case, so there is a error which has taken place. There is a error which has taken place, and this error can't be acknowledged, cannot be accepted because of this, the net profit is going to be affected, and the eventual tax liability also is going to change. So in this case, this figure should have been 2 lakh rupees. So we will change it to 2 lakh rupees and we'll find out the profit. So 2 lakhs plus 5 lakhs is 7, 7 plus 2 is 9, and 12 lakhs minus 9 lakhs is 3 lakh rupees. So earlier the net profit was 3 lakh rupees. Now by changing to the original figures, this opening stock to 2 lakh rupees, the profit has decreased by 1 lakh rupee. So how did it decrease? By deducting 1 lakh rupees to the old profit. So whenever there is a undervaluation of opening stock, you have to decrease it from the profit. So the next slide will show the accurate profit. So in this case, this should have been the case. This is the right profit trading account. So in this case, it has been rectified by changing the opening stock from 1 lakh to 2 lakh rupees. Number one. Number two, now because of this, the profit is now 3 lakh rupees. So earlier it was 4 lakh rupees was the profit. Now this is 3 lakh rupees. Now what has to be done? Whenever there is an undervaluation of opening stock, deduct it from the old profit, that much amount of undervaluation to arrive at the right net profit. So the summary is, due to undervaluation of opening stock by 1 lakh rupees, the net profit has changed, that is decreased. Yes, it has decreased from 4 lakhs to 3 lakhs. So in a situation when there is a undervaluation, sorry, this is opening stock is undervalued or undervaluation of opening stock, the amount of undervaluation, in this case it is 2 lakh rupees, should be deducted from profit to arrive at the right profit. So you have seen overvaluation of opening stock and undervaluation of opening stock. Now it's time to look at closing stock and overvaluation of closing stock. So sometimes there is a chance that the closing stock also or maybe overvalued or undervalued. Now let's talk about undervaluation of opening stock. Undervaluation of opening stock. So these are all the ones which you have to remember. And if at all in the problem they tell about overvaluation of opening stock, undervaluation of opening stock, or overvaluation of a closing stock, or undervaluation of closing stock, opening stocks, and all that stuff, you have to just remember the rule with this thing in your background of your mind. Okay, so let's talk about overvaluation of opening stock. Let's talk about overvaluation of opening stock. So the same way, opening stock is given, which is 3 lakh rupees, purchases are given, which is 5 lakh rupees, and wages are given, which is 2 lakh rupees. So the total expenditure on the debit side of trading account is 10 lakh rupees. Is 10 lakh rupees. Hope you have understood this point. By sales, it is 10 lakh rupees. By closing stock, it is 5 lakh rupees. The total is 15 lakh rupees on the credit side of trading account. You would carry forward this to the opposite side, which is 15 lakh rupees. And now the net profit is 5 lakh rupees. That is 15 lakhs minus 10 lakhs. Now, as this case of overvaluation of opening stock, additional information is given that the closing stock is overvalued by rupees 2 lakhs. Means it is this particular is overvalued. Means this should have been 3 lakhs, but it has been overvalued to 5 lakhs. So there is a element of error or mistake which is committed, so we have to rectify it. So this we will remove, and in this place we will put 3 lakh rupees or record 3 lakh rupees. So this is 13 lakh rupees. Now carry forward to the opposite side 13 lakh rupees. So this will eventually reduce to 3 lakh rupees because we have reduced by 2 lakh rupees. So this is 3 lakh rupees. So what has happened to the profit? Profit was previously 5 lakh rupees. Now it is 3 lakh rupees. So in case of undervaluation, you have to deduct 2 lakh, deduct the extent to which it has been, the closing stock has been overvalued. So we have to reduce 2 lakh rupees from the old profit to arrive at the right profit. So in the next slide, the error element of error has been rectified and overcome, and let's see how it has how the net profit is affected. So we have rectified this closing stock, which was earlier overvalued by 2 lakh rupees, and because of this, the profit is changed to 3 lakh rupees. So previously the profit was 5 lakh rupees. Now it has become 3 lakh rupees by adopting the errors and rectifying the errors. And in this case, the previous profit was 5 lakh rupees. Now the profit is only 3 lakh rupees. So we have to reduce by 2 lakh rupees. So this is the overvaluation which has taken place as far as closing stock is concerned. So due to overvaluation of closing stock by 12 lakh rupees, the net profit has changed from earlier 5 lakhs to 3 lakhs, which is a case of decrease in the profit. So what we have to do, whenever there is a overvaluation of closing stock, it has to be reduced. That much amount has to be reduced to the extent to which it has been overvalued. So in the case when the closing stock is overvalued, the amount of overvaluation, in this case, which is 2 lakh rupees, should be deducted from the profit to arrive at the correct profit by such amount of overvaluation of closing stock. So we have seen opening stock overvalued, opening stock undervalued, closing stock overvalued. Now the last item is closing stock being undervalued. Opening stock is undervalued. Now let's take the small example of trading account. The opening stock is 3 lakh rupees. The closing stock is 5 lakh rupees. Wages are 2 lakh rupees. The sales are 10 lakh rupees, and the closing stock, there is an error in this one because of undervaluation. So mistake has been committed by the accountant. So 18 lakh rupees is on the credit side of trading account. The same is carried on the other side, 18 lakh rupees. The total expenses are 10 lakh rupees, and the profit is 8 lakh rupees. Net profit is 8 lakh rupees. Undervaluation. Now this is a case of undervaluation, so certainly there will be a additional information as far as undervaluation of closing stock is concerned. The closing stock has been undervalued by 3 lakhs. Means this amount is not 8 lakh rupees, it is 11 lakh rupees. 11 lakh rupees is the original closing stock value, but it has been undervalued by 3 lakh rupees to 8 lakhs. So the closing stock should be 11 lakh rupees, which is undervalued by 3 lakhs and which is shown wrongly as 8 lakhs. So what has happened now? Let's see. This should have been 11 lakh rupees. This should have been 11 lakh rupees. The closing stock should have been 11 lakh rupees. So if it is 11 lakh rupees, the total value on the credit side of profit and loss account is 21 lakh rupees. So this is 21 lakh rupees. And certainly as the figure has changed by plus 3 lakh rupees, this will become 11 lakh rupees. So because of this, the original profit is 8 lakh rupees. But when you rectify the problem by changing the closing stock by 11 lakh rupees, the profit increases by 3 lakh rupees to 11 lakh rupees. So what should be done? The closing stock value, which is undervalued, to that extent it should be added back. So let's look at the rectification. So in this case, rectification was done from 8 lakhs to the closing stock value is changed from 8 lakhs to 11 lakh rupees. And because of this, earlier the profit was 8 lakh rupees. Now the profit is changing to 11 lakh rupees. So to the old profit of 8 lakh rupees, whatever is the undervaluation of closing stock, just you have to add. So when you are adding, the net profit is 11 lakh rupees. So due to undervaluation of closing stock by 3 lakh rupees, the net profit changed from 3 lakhs to 11 lakhs. So once we are adopting the changes, the profit has increased from 8 lakhs to 11 lakh rupees. So in this case, in a situation when the closing stock is undervalued, the simple adjustment what you have to do is the amount of the undervaluation, which is 3 lakhs in this case, should be added back to profit to arrive at the real profit or correct profit by such amount of undervaluation of closing stock. So hope you have understood this particular topic of what are the rectifications which we have to do, what are the items which have to be added, what are the items which have to be deducted, and many other aspects. So with this, hope you have understood it. So all this, the formats of determining the profit and loss account, the profit from business or profession has been discussed thoroughly at length, and please keep a total idea of this particular format, because this format will be used for doing the problems to calculate the accurate profit or loss from conduction of business or activity of from the activity of profession. So hope you have understood this up to this stage. Now let's take up some expenses which are allowed on the debit side of profit and loss account because of the virtue of some certain sections under uh, profit or gains from business or profession under Income Tax Act 1961. And one such item is assets. And these assets are going to be discussed under section 32 of Income Tax Act 1961. Income Tax Act 1961. So here if you look carefully, here we have seen the rate of depreciation of a building mainly used for residential purpose except hotel and boarding houses. Building other than the point which is mentioned above will be depreciated at 10%. Furniture, these are all the rates which are prescribed under Income Tax Act 1961. So, for example, furniture and fittings should be depreciated by 10% every annum. For example, motor cars should be depreciated at 15%. Motor cars, buses, lorries, taxis used in hiring business. So, when you are into the hiring business, that is transportation business, the usage is normally high, and the rate of depreciation is also very high. For equipments which are used For controlling air and water pollution, the rate of depreciation is 100 percentage. Computers, which are software and hardware, should be depreciated at 60 percentage, and so on and so forth. So you have to remember all these things. And last but not the least, if you look at the last point, these are all tangible assets. These are all tangible assets. And the last item, which is the 17th item in this particular slide, is intangible assets. So intangible assets are going to be depreciated at 25%. But depreciation is nothing but an allowable expenditure which should be shown on the debit side of profit and loss account to this extent, which are the rate of depreciations which are prescribed under Income Tax Act 1961. So, okay. So, let's talk about some of the uh, points as some of the expenses which are expressly allowed to be deducted. And these specific deductions or expenses which are allowed to be shown will fall under the category of section 30 to 36. So, specific deductions. So the heading is rent, rates, taxes, repairs, and insurance of building. So if there is a premises, whether it is a factory, manufacturing unit, or administration building, or research and development building, so there are so many buildings which are used in businesses. So if you are paying rent of that one, it is an admissible expenditure. Number one. In the same way, if some repairs are carried out on those properties, then that is also an admissible expenditure. If you are paying some taxes like municipal taxes or other taxes, there are also this expenses are also admissible expenses which can be shown on the debit side of profit and loss account. If at all, if it is forgotten and not shown, then it should be shown by deducting it from the net profit, as we have just now discussed in the last class as well as this class. Insurance premium paid on this building is an admissible business expenditure which should be shown on the debit side of profit and loss account, and it is a revenue expenditure also. This is a category of revenue expenditure. In the last class, I told you that personal expenditure and uh, capital expenditure are not admitted on the debit side of profit and loss account as an expenditure. In the same way, so just now we spoke about building. On this building, you are paying rent. Repairs are taking place. Insurance is being carried out, or insurance is done, and taxes are paid. So these are all admissible expenditures. So, but at the same time, let's talk about furniture also. So once I'm talking about furniture, plant and machinery, there may be some expenditures incidental to this plant and machinery. For example, repairs and insurance. Repairs and insurance. So if you are repairing plant or machinery or furniture, it is an admissible expenditure because this expenditure is done for the exclusively and wholly for the purpose of business. And insurance of plant and machinery is certainly has to be done to protect the interest of the business, and this is done. And expenditure will be allowed on the debit side of profit and loss account to be shown. Next one is depreciation. Just now we show we just now saw uh, this particular slide where different assets are there in a manufacturing unit or in a business entity, and the rates of depreciation are pronounced or prescribed by Income Tax Act 1961. So you have to remember all that stuff. So let's talk about the depreciation. It's a very lengthy particular topic. So depreciation will fall under the section 32, and so depreciation. What are the conditions for claiming the depreciation as an expenditure? So there are certain conditions which are laid down by Income Tax Act 1961 to uh, to claim as an expenditure in the form of depreciation on assets, whether these assets are tangible assets or intangible assets. The first condition is the ownership of the asset. So the owner is the proprietor, and the proprietor should be the owner of this asset. Number one, and the asset must be the assessee must be the owner of the asset fully or partly, and the asset should be used wholly for the purpose of the business. So these are the conditions which are laid down by Income Tax Act 1964 61, sorry, for claiming depreciation as an admissible expenditure on the debit side of profit and loss account. And one among them is very important. There is an important point here. Depreciation is to be claimed on a block of assets, not an individual assets. It's a block of assets and not as an individual asset. So we will discuss about this in the session in the forthcoming session. So depreciation under section 32 has been categorized. All the assets are categorized into has been divided into two categories. One is tangible assets, and tangible assets are those assets which can be shown, which can be seen, which can be touched. For example, building, machinery, plant furniture. Intangible assets. Intangible assets are those assets which can't be seen. We can only assume it. We can't touch them. We can't see them. We can't uh, feel them. So some of the intangible assets, as you know, when you studied accounting, know-how, technical know-how, technological know-how, copyrights, trademarks, patents, license and franchises, or any other commercial or business right of the nature acquired on or after 1/4/1998. So there are two types of assets for the purpose of calculation of depreciation. One is tangible assets and one other is intangible assets. Building, machinery, plant and furniture, and motor cars and all that stuff which can be seen is tangible assets. Intangible assets are know-how, patents, copyrights, trademarks, and other things. So, what are the conditions for claiming the depreciation? To claim depreciation as a genuine business expenditure, asset must be owned by the assessee and it must be used for the purpose of business or profession. Now, let's talk about, before I go into this particular slide, I will give you the meaning of the word block of assets. So in this case, I now just now showed you block of assets here. So what do you mean by block of assets? What do you mean by block of assets? This is a very important uh, concept which everybody should know as far as finding out the depreciation amount or calculating the depreciation amount, which is meant to be shown on the debit side of profit and loss account. So let's talk about what do you mean by block. Block means a set of assets with similar categories, and one of the characteristic is so same rate of depreciation. Okay, for example, uh, just I will give a small example. With this you will understand. For example, if there is let's take a small example of a company called as Bajaj Auto. Bajaj Auto, for example, has tangible assets like land, building, plant, and machinery. And in this case, I will just take a small example of building, and with this, we will find out the meaning of the concept. What is block of assets? Block of assets. So, I'm just giving an brief understanding about block of assets with a example. So, building is an asset. But the building can be used by this company for different purposes. So building can be used for one is research and development. So research and development activities carried in that building. Building can be used for administration purpose. Administration purpose. Building can be used for canteen facility. Building can be used for residential purpose of the employee. So building itself is divided into four parts, for example. So this is R&D building, this is an administration building, this is a canteen facility building, this is a residential building, and not least, last but not the least, manufacturing building, where the manufacturing activity is carried out, which is the major most important building of the company, because manufacturing is taking place. So here, in case of research and development, you can't have the same depreciation rate as compared with the building which is used for manufacturing, because this is highly used, this is least used, and the depreciation in this case can be of 10%. In this case, it may be of 50% because it is heavily used. Canteen, for example, is comparatively compared to this one is least used, so it is 5%. And administration building, for example, is 15%, and residential purpose is 25%. Okay, so what I have done under the same asset, I have classified in the buildings on the basis of depreciation based upon the purpose for which they have used. Now let's take the example of, now further to block them, to put under same block, I will just take this example and this example. Please just remember that canteen is 25%, and manufacturing building depreciation is 50%. Now let's take a small example how to put under the same block of assets. So now let's talk about canteen facility. Now let's talk about canteen facility. The building is used for canteen. Canteen, can there be only one canteen? No, there can be 10 canteens in the same particular manufacturing unit, or in that particular factory there can be, as the factory is very big and the number of employees are also humongous, 10,000 employees, so one small canteen is not sufficient. There can be 5 canteens, for example, A, B, C, D, E. So this is called as block with same asset and same depreciation rate, which is 5%. So another example is our residential building. A residential purpose, the buildings are constructed where the employees go and stay, and they are accommodated, and they're used for residential purpose. So these buildings can be of large quantities. For example, there are 100 buildings for residential purpose. So A building, B building, A1 building, B1 building, so on and so forth. So all these are used for residential purpose of the employee. So this is one block of asset. In the same way, when I told you about manufacturing plant, manufacturing building. So manufacturing building, there can't be only one manufacturing building. There can be more than 20. For example, A building, B manufacturing building, C building, D building, E building, F building. So these are all put under one category of building with, because of the same depreciation rate, which is 50%, as just now taken an example. So this is one block of asset. This is one block of assets. So that is the meaning of the word block of asset. This block of assets you can observe when you go to an industrial visit, and you can get an analysis of the different types of buildings used for different purposes, and which are kept under same block while doing accounting and finding out the depreciation rates and amount. So hope you have understood this stage. Next one, very important one. We will be discussing about this point from time to time on a regular basis. This is very, very important. This is very important. Just pay your attention on this. Depreciation under Section 32 of Income Tax Act 1961 under the head Income, Profits or Gains from Business or Profession. See, the aforesaid provision is applicable in the following conditions are set. If the following conditions are satisfied, okay, we'll see what are the conditions. Condition 1, if the asset is acquired during the previous year and it is pushed to use for a period of less than 180 days, then if the two conditions are satisfied, when the two conditions are satisfied, the depreciation shall be restricted to 50% of the amount calculated at the percentage prescribed. So what does it mean? For example, let's take a small example and we will understand. This is very important. If you are working in if you are going to work in a manufacturing unit, you have to look at this particular uh, point. Very important. For example, we are in the year 2019-20. We are going to solve the problems of 2019-20. So in the year 1920, in between the year. For example, on 1/11/2019, a machinery was purchased. A machinery or was purchased for some 50 lakh rupees. For 50 lakh rupees, whose rate of depreciation as just now showed you the slide. If you remember the slide, so this is a slide where the depreciation rates are mentioned. So in this case, the depreciation rate of, as far as this particular plant or machinery is concerned, is some 30%. And this particular machine has been put to use on 1/11/2019, on the same day when the asset was purchased. Now, this asset will be used for how many months during the year? We have to find out. So, for the whole month of 11th, that is November, December, January, February, and March. So, only 5 months it is going to be used. So, on an average, 30 days we have got in a month. So, we are going to use it for 150 days during the previous year. So, it is less than 180 days. So, if you are using the asset for less than 180 days in the year in which it was first acquired, then if this condition satisfies, if these two conditions are satisfied, and in this case the first condition also is satisfied, that the asset is acquired for the first time in on 1/11/2019, and it has been put to use for less than 180 days. So as the asset is used for the purchase in the previous year and put to use for only 150 days, which is less than the prescribed days of less than 180 days, then you will not be allowed to show full amount of depreciation. You will be allowed to show only 50% of depreciation. So in this case, 50 lakhs into 30% is the rate of depreciation. So this is 15 lakh rupees you can show on the profit and loss account. But as it is coming under the condition 1 and condition 2 is satisfied, we will be able to show only 50%, which is into 50% is 7.5 lakh rupees. So 7.5 lakh rupees will be the amount of depreciation which can be claimed and shown on the debit side of profit and loss account. So this is a very, very important point, and we are going to talk about some more points under this particular topic of depreciation. Next one, block of assets. I told you the meaning of the word block of assets. So what are the conditions for claiming depreciation also we have seen, but till if some points are there, let's cover them also. Assets must be owned by the assessee, that is there. It should be used for the purpose of business or profession and not for personal. It should be used during the previous year. Depreciation is available on specified tangible assets and intangible assets. I told you tangible assets are buildings, machinery, plant, and furniture. These buildings can be they can include roads, bridges within the factory or manufacturing units, wells, tube wells. Machinery, it can be any kind of equipment. And plants, you got ships, vessels, vehicles, books, so on and so forth. And furniture also includes articles of convenience or decorations, all that stuff. Okay. So buildings, this is the rate of depreciation. If the depreciation, if the building is for the purpose of residential building other than hotel or boarding, just now I told it is 5%. It's if the building is a non-residential building or godown, non-residential building, but it is a godown or office or a factory, including hotels and boarding, then it is 10% depreciation can be claimed. The building is a temporary construction, then you can claim 40% depreciation, and these are all there in front of you. And intangible assets like patents, copyrights, trademarks, and know-how, license and franchises and other stuff, it has to be depreciated over 4 years. That is 25% first year, second year, third year, and fourth year. Oil wells 15%. Air, water, pollution control equipment, if it is purchased, then 40% discount depreciation is allowed. Computer and computer software, computer including computer software, you can claim 40% discount depreciation. Sorry, and books owned by The company for professional use 40% can be discounted, depreciated, sorry, motor car used for hiring. And so this different assets have different depreciation rates, and these are in the books, so you need not worry. Whenever there is a depreciation problem, they will certainly mention what is the rate of depreciation, or while you are working you can open the reference book and get the depreciation rates. Now, how to calculate the depreciation for a particular year? There is a format. This format has to be followed thoroughly. This particular format has to be followed thoroughly. There is no other way. So let's take a small example. Let's take a small example, and then we will find out how to follow this particular format for finding out the depreciation for a particular year. Okay. So first you will be given on 1/4/2000 2019. Okay, because our problem, we are solving the problems of financial year 2019-20. So let's take a building as a block of buildings, and the depreciation rate is some 20 percentage, for example. And this building has got five buildings: A, B, C, D, and E. So let's calculate the way the depreciation is to be calculated. So you got these five buildings at the beginning of the year, that is on 1st April 2019. So A building, B building, C building, D and E building, some 5 crores, 50 crores. Okay. Number one. Number two, see, you can construct one more building in the same year during 2019-20. So, for example, in this case, you constructed or acquired a new building, which is F building, and it is purchased for or constructed for 10 crores. So now you got building A, B, C, D, E, and F. The value of it is 60 crores. So these are all the buildings what you got in your business. Now out of this, one particular building is sold, or it is disposed, or it is sold for that matter. Which in this case, let's talk about the first two buildings are sold. So now A, B buildings are sold for 30 crores. 30 crores. So now the remaining buildings value is 30 crores. 30 crores. So what are the remaining buildings? C, D, E, F. So these are the buildings which were left at the end of the financial year, that is on 31st March 2020. And the value of this building is 30 crores. Now on this 30 crores, you can claim a depreciation of 20 percentage or 20 percentage, which is 6 crores. So this is the way one has to follow the format to find out the depreciation for a particular year, and the particular year is, in our case, it is 2019 2020. Now hope you have understood, but once again I will explain this particular concept of depreciation, how to claim the depreciation, and what format has to be followed. And because this is very important, and in your when you are working, uh, this is the way you follow as far as uh, finding out the amount of depreciation. Hope this is clear. Again, I'm just so for the year 2019-20, we are finding out the amount of depreciation which can claim. So at the beginning of the year, that is on 1st April 2019, we have five buildings: A, B, C, and D. The value of these buildings are 100 crores, for example. Now, in between the year, that is on from 1st April to 31st March 2020, we can purchase or construct a new building. And assuming that there is F building and G building which were constructed, and the amount of the amount which was spent on construction or purchase is 30 crores. So the total we had were 100 crores, and we have added another 30 crores buildings. So the total value is 130 crores. Now it may so happen that out of these seven buildings, now A, B, C, D, E, F, and G, two or three buildings are disposed or sold. For example, ABC buildings are sold for 70 crores. So now out of A, B, C, D, E, F, G, ABC buildings are sold, and now we are left out with D, E, F, G buildings, which is a block now, and the value of the closing value of the buildings at the end of the year, that is on 31st March 2020, is 130 crores minus 70 crores is equal to 60 crores. So if there is a value which is a closing value, on this closing value you can claim a depreciation, and the depreciation rate of this particular block of the asset is 20 crores. So 60 crores into 20% is equal to 2 crores. So the depreciation is 2 crores. So now 60 crores minus 12 crores is 48 crores. So the next year opening value or opening WDV, written down value of the asset or the block of asset is block of assets DEFG is 48 crores. So this is the format you have to follow. So next point, written down value of the how to compute the normal depreciation. So just now we spoke 60 crores into 20 percentage is equal to 12 crores. So this is the format. Written down value of the block of asset on the last day of the previous year, which is 60 crores, into multiplied by depreciation rate, which is 12 to 20 percentage, is equal to depreciation amount, which can be claimed for the financial year 2019-20. However, now we are going to talk about the most important point uh, as far as depreciation is concerned, where there are certain exceptions. So these exceptions are very, very important. Please pay attention. There are 5 exceptions, and all these 5 exceptions I am going to discuss, where depreciation is having some exception as far as claim is concerned. So what are these exceptions? Very important. So there are 5 exceptions. You can expect a question in your examination as far as these exceptions of exceptions to depreciation under section 32 of Income Tax Act 1961, under the head of income, profits or gains from business or profession. So what are these exceptions? I will just read out, because I have a separate slide where I have calculated and shown the explanation of exception 1, exception 2, exception 3, exception 4, and exception 5. Now let's talk about the exception 1. With the written down value, WDV value of the block of asset is reduced to 0, though the block is not empty. So what is this? So in the next slide, I have given a numerical example. I will explain at that point. Just you listen to the different exceptions. Exception 2, if the block of asset is empty or cease to exist on the last day of the financial year closing, but there is a written down value which is not 0. Exception 3 is in case of imported cards. Exception 4 is in case of succession or amalgamation of business or business reorganization or demerger, what should be done as far as depreciation is concerned. And the last one is, already we discussed a part of it. Now we are going to talk about in detail the remaining part. With the asset, with the first year in which the asset is acquired is put to use for less than 180 days. So there are some exceptions to claim depreciation. So these are the 5 heads. Now we are going to discuss about all these exceptions with a numerical illustration, and that will make your life easy and you will be able to comprehend. So let's take the first particular instance or exception. Let's take the first exception. The first exception is as follows. If the written down value of the block of asset is reduced to zero, though the block is not empty. Though the block is not empty. Now what does it mean? See, at the end of the financial year, the block of assets are there. There are some assets in the block, but the block value is 0. So can you claim on 0 depreciation? No, because 0 into anything is 0. So at that time, you will not be able to claim depreciation. Now, how is it possible? How this has come into picture? So let's take a small example. The same format again I'm using. because this format is a standard format for claiming depreciation. The WDV, that is the WDV, or depreciated value of the block of assets at the beginning of the year, that is 1/4/2019, were 50 lakh rupees. And how many assets, how many plants were there? This is an example of plant as a block. Okay, plant as a block, and the plant has got a block of three plants, A, B, C, and the A, B, C, the value of these plants put together is 50 lakh rupees. That is on 1/4/2019. Now during the year, a plant D was acquired for 20 lakh rupees. So the total value of all the four plants A, B, C, D are now 50 lakhs plus 20 lakhs is equal to 70 lakhs. Now, the most important point. This now the plants in this case were A, B, C, D, out of which one plant was sold. One plant was sold. The plant which was sold was B, and the sale consideration means plant B was sold, and from the sale of plant B, the company got 85 lakhs. So in this case, the amount of reduction cannot exceed rupees 70 lakhs. So in this case, you can't reduce 85 lakhs from 70 lakhs. You can remove only 70 lakhs. So the difference of 15 lakhs is called as short-term capital by the rule under section 50 subsection 1 of Income Tax Act. So even though there were four assets, so four plants, one plant was sold for the more than the total value of all these four plants put together. So the difference amount is called as short-term capital gain. Now 70 lakhs minus 70 lakhs, because it can't exceed it can't exceed more than 70 lakhs. So that asset has been removed. So the value of this block of asset, and this block is still having three more plants A, C, and D, whose value is 0. So in this case, though the block is still existing, the block is having ACD, but the value of the block is reduced to 0. In this case, you can't claim depreciation because the value of the block is 0, even though the block is having some plants. So on this 0, you can calculate 0 into any percentage will give you 0, number one. So the depreciation is 0. And on top of it, look at the closing value of the asset. The closing value of the block consisting of A, B, C, D, A, C, D, because B was sold, is now nil. So when you are carry forwarding these assets to the next year, you can show WDV value of ACD assets as 0 only, because the block of assets is reduced to 0, as one of the plant was sold, and because of this the value of the block was reduced to 0. Hope you have understood. Next one, the next part is, the next exception is, if the block of asset is to exist, but there is a written down value, for example, let's take a small example. With that we will understand it. So I am a kind of teacher who takes numerical illustrations to make the point clear. So in this case, the opening WDV or written down value of plant A, plant B, and plant C, which is a block, is 50 lakh rupees. So plant D was acquired during the year for 20 lakh rupees. So now you got A, B, C, and D, whose total value is 70 lakh rupees. Now in this case, all these assets were sold during the year. So in the previous case, one of the asset was sold, and in this case, all the assets were sold. And the sale amount is less than the total value of A, B, C, D. So you have sold it for 50 lakh rupees. The value of these assets are 70 lakh rupees, but you have sold it for 50 lakh rupees. Now 70 lakh minus 50 lakhs will give you 20 lakh rupees, which is the written down value of the block. But is there a block? Yes, there is a block. Do you have assets? No, all the assets were sold. So written down value of the block, which is empty. There is no plant in this one because all these assets were sold. All the plants A, B, C, D were sold. So there is no block. There is a block with no asset, and the asset value is 20 lakh rupees. The block value is of 20 lakh rupees. So one of the conditions is to claim depreciation, you should have a block. But if you have an empty block and there is no asset in that empty block, you can't claim depreciation. So in this case, even though the value of this block is 20 lakh rupees, but there is no individual item or asset in this block, the block doesn't exist and you can't claim depreciation. So please remember, if you want to claim depreciation, you should have asset in your hand. If you are not having asset in your hand or block in your hand, even though the block has got a positive value as shown in this particular case, you will not be allowed to claim depreciation on this 20 lakh rupees. So this is the first point. So in this case, on if you want to calculate depreciation, it is not allowed because the block is empty. Number one. Number two, very important, 70 lakh rupees of plant was sold for 50 lakh rupees, and there is a sale of capital asset. Sale of capital asset. When there is a sale of capital asset and there is a loss, this is called as a capital loss. And in this case, there is a capital loss to the tune of 20 lakh rupees because 70 lakhs worth of plant is sold for 50 lakh rupees, and hence there is a capital loss of 20 lakh rupees, which is short-term capital loss. Hope you have understood this point. Next one, third point, third exception. So this is it's not widely now prevalent, but still, if an imported car was acquired, if an imported imported car. So we have Mercedes Benz, big cars purchased for 100 crores or 50 crores or 75 crores from UK or Germany or Europe or America. So if there are imported cars by these big companies like Reliance Industries, Tata Steel, Tata Motors, TCS. So if that kind of asset is now explained as exception 3. If an imported car was acquired, if an imported car was acquired during March 1st 1975, and in during means in this period between 1st March 1975 and 31st March 2001. So during this duration, if a imported car is acquired, depreciation is not admissible unless it is used for the business of running it on hire or for tourist or for the purpose of business outside India. So this is a very important point. If any imported car is purchased during this specified duration as shown in that PPT, and if the asset is the depreciation is not allowed in such a case when until or unless this particular asset is used for the business of uh, run hiring for tourist or for purpose of business, and this should be outside India, not in India. So in such a case, so if a car is imported uh, in this duration of time and the car is not used for the purpose of business of running it on hire for tourist or for any other purpose, and in such a case depreciation is not allowed. Any imported car acquired after this particular date, 31st March 2001, is eligible for depreciation like any other car. So this is a small exception 3. Exception 4. Exception 4 is very important, and I will explain this with a suitable example. This is an exception which should be remembered, understood, and analyzed by every accountant or a tax practitioner and students who are pursuing their direct taxation. So certainly and surely, In this dynamic business world, there are amalgamations, successions, reorganization, demergers, and all that stuff which is taking place. So there is a change of hands as far as assets are concerned. So ownership keeps on changing from one entity to into the hands of the other entity. So who can claim depreciation? How much he can claim is the essence we are going to talk about. So let's talk about the provisions. The provision is the provision is relating to in case of merger, in case of succession of business in entity, or amalgamation of one entity into another one, or business reorganization. The this fourth exception as far as depreciation comes into picture. These provisions are applicable while determining depreciation if there is a change of the ownership. So ownership has changed. For example, uh, for example, amalgamation. I will take a small example of amalgamation. A company is there and B company is there. These two companies are amalgamated. So the asset of this will be going into the hands of B. So there is a change of ownership. So depreciation, how much this company can claim after amalgamation, and how much this can claim before amalgamation, and all that stuff will be discussed with a suitable example. So what do you mean by business organization, reorganization? So business reorganization can be of any kind, conversion of firm or sole proprietary concern into a company. So a firm or a partnership firm or a sole proprietary concern can be converted into company. There can be a demerger of a company. There can be amalgamation of a company. There may be amalgamation or demerger of cooperative banks and all that stuff. Okay, you can just, this is under Company Act, Companies Act. So these definitions are relevant in under Companies Act, and you remember this one. Now I will take a small example which will make your life easy. So in this case, there is a company, and a firm owns a plant A and B on 1st April 2019. There is a firm by name A, and this firm A has two plants A and B on 1st April 2019. And the value of this plant is some 30 lakh rupees. The two plants put together is 30 lakh rupees, and the depreciation rate as prescribed by income tax authorities are 20 percentage. It purchases another plant C on 1st April for 20 lakh rupees. So 30 lakhs were there, value of A and B plant. And on the same date, C plant was purchased for 20 lakh rupees, and the total value of the plant was 50 lakh rupees. Now, the firm is converted into a company with effect from 20 July 2019. So, in between the year, in between the year, this particular business or there was a business reorganization, and the firm A in this particular example was converted to a company. So, in between this financial year, that is on in between 1st April 2019 and 31st March 2020, that is on a particular date which is 20 July 2019, the company was this business was reorganized into a firm into a company. Now let's calculate how much the firm will get depreciation and how much the formed business company will claim the depreciation in their books of accounts. So 50 lakh is the value of the assets which were transferred from uh, which was uh, uh, which were transferred from a firm to a company by virtue of business reorganization, which is a conversion which has taken place. So total depreciation for the whole year on 50 lakh rupees is at the rate of 20% is 10 lakhs. Now, how much the firm A can claim and how much the company can claim. So first we will find out the duration from 1/4/2019 to 20 July 2029, where the firm was in place. So 1 April 2019, that is 1st April 2019 to 20 July 2019. How many days were there? There were 110 days. So for this 110 days, April, May, June, and July a part. So 31 days in April, sorry, 30 days in April, 31 days in May, 30 days in June, and 19 days in July. So if you total 30 plus 31 is 61, 61 plus 30 is equal to 61 plus 30 is equal to 91, 91 plus 19 is equal to 110. Now, next one, the remaining part of the year, which is 255 days. So 10 lakhs into 255 days by 365. So out of this 10 lakh, a part will go as a depreciation on the debit side of profit and loss account in the name of the firm, and the remaining will go into the books of accounts of company and which will be debited to that amount. So 10 lakhs into, this is the whole depreciation, 10 lakhs into 110 by 365 days. This is the depreciation which can be claimed by company, which can claim by firm A, and 110 lakhs into the remaining 255 days by 365 days, which is some 3 lakh rupees or 3 lakhs 1370 will go. Sorry, 6 lakhs 98,630 will be the depreciation amount which can be claimed by firm, by the company. So this is the way the depreciation can be claimed. Now, the last part of our discussion as far as exceptions are concerned, it is very important. Already a part of it was discussed. Now, the remaining part and the part, this part will be discussed again once again. So, if a particular, if the year in which an asset is acquired for the first time, it is put to use for less than 180 days. Already I told that for in the year 2019-20, if the asset is used purchased for the first time and it has been put to use for less than 180 days, then what will happen? So if the asset is acquired during the year and it is put to use for less than 180 days during the whole year, then I told you that the amount of depreciation which can be claimed is 50% of the original depreciation rate. Now this table will give you an ample understanding about how depreciation can be claimed in cases where the asset is used for less than 180 days and many other conditions. Very important. Please take a note of this particular slide. So I've got 4 columns, whether the asset is put to use during the year or not. How many days the asset is put to use is the second column. Depreciation of the first year in which the asset is acquired and depreciation of the subsequent year. So first we will see this particular column, this particular row. So whether the asset is being put to use during the year? No, it is not put to use. How many days? No, when they is not put to use, no question of putting for a use for a single day also. Now in such a case, no depreciation is allowed in the first year in which it is acquired or any subsequent year after the purchase. So if an asset is not put to use even for a single day, then in such a case, in the first year in which it was acquired for the first time, no depreciation is allowed. And even in the subsequent years also, if it is used, not used for a single day also, or not put to use during the year, no depreciation will be allowed. Second condition. Second condition is whether the asset is put to use. Yes, it is put to use. For how many days it is put to use? Less than 180 days. And if the asset is acquired in that year, then only half of the usual depreciation is allowed. Hope you have understood this. And depreciation of subsequent years, even though it is used for less than 180 days, as this is not acquired, but it is put to use for subsequent years, so amount of depreciation is allowed. Now, third condition. The third condition is whether the asset is put to use. Yes, I have put to use. For how many days you have put to use? 180 days. Whether the asset was acquired in this year? Yes. But how many days it was put to use? More than 180 days. So full amount of depreciation is allowed. Usual means full. And last case, depreciation of subsequent years when the asset is put to use. Yes, it is put to use. How many days it is put to use? 180 days. So if for the subsequent years when the asset is put to use and more than 180 days it is put to use, the full amount of depreciation is allowed as an expenditure depreciation. So with this, I think maximum part of our discussion related to depreciation has been discussed, and this is the slide which shows the different rates of depreciation. And I will stop here, and if you have any doubts you can get back to me on my WhatsApp number or on my email which is shared at the beginning of the session. So hope this particular session was